11:02. So I sent your introduction to Anita Johnston, but it looks like she may not be able to hop on.
Okay.
So Aaron, our president, is here, and I don't know if Aaron would like to introduce you. Hate to put Aaron on the spot, sorry.
I don't have the introduction in front of me, but I do know a lot about Julie and Team Jackson Ozell. They're very involved in our community. Ozell's on the Board of Opportunity Council, which helps with a lot of rental assistance. With my mom as a property manager. Julie and Ozell are very creative thinkers. I've done a few transactions with them, and we've had some things come up that they are just so hardworking and really think out of the box to find solutions and get us to the closing table, even if it takes a little longer or shorter. Sometimes we've had quicker closings as well. So I really appreciate them, and Julie has stepped up in a big way. She's also a commissioner with our county and very involved in our government affairs committee. So thank you for all the things you do. And there's a much longer list of things that you do, like reverse mortgage, right? And your first time home buyers classes and financial literacy education for folks. Am I missing anything? I'm sure I am.
Yeah, I'm actually also on the board of Island Senior Resources.
Yes.
Yeah.
Right?
Yep. And I'm a volunteer for the Opportunity Council. Don't know how I got connected with that.
Well, we appreciate everything you're doing, and we really appreciate you stepping up to do this first.
Hi, Maddie. Have a good time.
Lunch and Learn of 2025. So thank you, Julie.
Awesome. Thank you so much. So I am Julie Jackson with CMG Home Loans. We are located in the beautiful Oak Harbor. So we are a local lender. I was asked to share some things, and when we were talking about things that are really pertinent to what we're being challenged with in today's market, that was homeowners insurance and HOAs. I would love to have some participation because I'm not used to doing presentations on Zoom without people participating. So I've got some questions for you. Does anybody want to guess when the very first homeowners insurance company, or actually the very first homeowners insurance began? Does anybody know when homeowners insurance began? Don't everybody speak at once. Somebody guess. Paige, come on, someone. Okay, fine. All right, you're muted. You're muted, so I can't hear you. Okay, I'll tell you what it is. It was the year 1666, believe it or not. 1666, and that was from the Great Fire of London. That is when homeowners insurance came to be a thing. So the next question, which I had to look up too, is who do you think the oldest insurance company is in the United States that is still in existence today? And who founded it? We'll see how fast you guys are on Google. Terry's Googling. Make sure you unmute yourself because you're muted.
You're muted now.
Did you find it?
I'm not participating.
The Philadelphia contribution.
It's the WIAR Lunch and Learn on homeowner insurance challenges.
Oh yeah, I was gonna listen to that.
Contribution.
And Ben Franklin is the one that put that together. Could you believe it?
1752.
Yep, 1752 in the United States. So that is a long history of homeowners insurance, and things have changed a lot since 1752. So let's get started. Would you pop to the next screen, please? Thank you. So today what we're talking about are common challenges. I said for real estate agents in today's market, it's really a lender issue as well that we're running into with homeowners insurance premiums and homeowners associations. So we're going to talk today about what those challenges are and what lender requirements are. Next slide, please. All right, so we all know that the premiums are going up, and the reason why is because of risk. So the insurance agencies are actually pulling out of some states and have decided that they're not going to be covering certain states or certain areas. This actually includes Washington State, if you're primarily working in Washington, in Eastern Washington, because of the fires that have been annually. There have been some insurance companies that have pulled out of that area as well. So homeowners insurance is interesting. Homeowners insurance is kind of like a credit report in terms of what they track. So a house has like a credit report attached to it. And what I want to do is give you some real life examples of things that have happened with our clients and some things that I was able to talk to some other insurance agents that are local. So I called several agents locally to get their take. And I had everything from the sky is falling to it's just risk-based, it is what it is, and everybody needs to calm down. So that was, I got everything from both ends. And what I will tell you is this: we need to be prepared. We used to be able to calculate what homeowners insurance was going to be for a client. It was very easy. I mean, we could guess and we would be within dollars of what a premium would be. But because of the sophistication that is tied into these credit reports, if you will, of properties and homeowners and what they've done in the past, it's now thrown in a whole new conglomeration and confusion into what that premium will be. So personally, I am in some cases doubling what I used to estimate for a premium. And sometimes that is exactly right on, and sometimes it's not enough. I haven't been too high yet, which is truly exciting. Would you mind going to the next screen, please? Thank you. So real life example is a house surrounded by trees, and they had a tree fall under the house. The insurance company covered it, but then also decided to take a look around the rest of the house. And what they found were that the neighbors were not keeping their trees trimmed. So because of that, the homeowners insurance company said, okay, fine, we're going to cover this destruction of the home. We're going to replace the roof and so forth. And then when it came up to renew the policy, they were dropped. The reason they were dropped is not because a claim was made. It was because when the insurance companies are doing their risk assessments, they're looking to determine if can they recoup the costs that they've had to lay out to make those repairs. If you have to replace a roof in this day and age, you're not going to be able to recoup that in an insurance premium within a couple of years. They like to see that recoupment, from what I'm told, between 1 to 3 years. So roofs now are in the tens of thousands of dollars, right? So you're not going to see that right away. I had another client who, again, was surrounded by trees. They were purchasing a new home, surrounded by trees, and they were several hundred feet up from the waterfront. But because the previous owner had made a water claim, which had actually, it was the waterfront that had caused this. There was some seepage from the ground causing water to accumulate in the basement, and they had a flood in this finished basement. So because of the previous owner's claim, their homeowner's insurance quote was double what we thought it should be. And this is also in Washington State. I've got a client in California who had a property that needed a little bit of work. And so she got the work done, went to get her homeowner's insurance, and the homeowner's insurance company says, this home is zoned to be in a business district. Yet you have a residence, a personal residence that someone can live in. We're dropping you. So they dropped her because the property was zoned as business. So we need to be very careful when we're getting homeowners insurance and when we're looking at properties to make sure that we're understanding what the zoning is and what the zoning allows. If the zoning is not allowing residential or mixed use, then we are seeing homeowners insurance companies dropping those policies. The other issue that we're running into with the homeowners insurance has to do with personal claims. So I'm sure that you've all heard during our big windstorms, when we lose electricity, people start making claims with their insurance companies for food loss. I know someone who had an email go through their neighborhood that said, hey, the insurance company is to give you $500 for free. Just put in a quick little claim and you'll get $500 put in your account. And this particular person who I know called me and said, can I do this? And I said, you can, but you shouldn't, because it will affect you. It will follow you when you go to buy a home later. Well, the whole neighborhood went ahead and put in those $500 claims, even though they did not lose the food. And guess what? Now those insurance premiums are much higher. We've got a client that had that same situation last year, put in a claim during the previous November's windstorm, and their homeowners insurance was so high that we had to completely rework the loan in order for them to qualify for that monthly payment. So how do we work on this? What do we do to combat it? Because we know that there's a challenge, we have to have a solution. And here's a solution. First of all the agents are going to say, work with a trusted insurance agent that's local. And I'm going to agree with that because our insurance agents know this area. They know what happens. We know that every year we're going to lose power for maybe several hours, maybe a few days, maybe longer. That's just the nature of the island and the county. The insurance agents will tell you to get several quotes from several different insurance companies. You know, they're all somewhat similar. There are some differences in the premiums that are quoted. But what we're finding is that if your seller has an insurance policy in place that they've kept up to date, that sometimes their premium policy being moved to the buyer is less expensive and less painful to get put together than going to a whole new insurance company. So one of the things that I'm recommending to agents as you're taking listings is find out who the homeowners insurance agency is. Find out what their premium is so that you can share that with the buyer when the buyer comes in. It could save you a lot of time and a lot of heartache, and it really does help the buyer. The next thing is property maintenance. So our world is instant. We have satellite imagery, we have the drones that go around and look at the properties. And then of course we have our public assessor's office that takes photos from the exterior of your home. And maybe they took it on a bad day. Maybe they took a picture on a day when it was winter. There's nothing on the trees. Your yard looks terrible. And maybe the shadowing makes the paint job look like it's bad. These are real life things that the insurance companies are using to make determinations on what a homeowner's insurance premium would be. Now, I know a lot of people say, well, you know, if I'll paint my house later, why do they care about the paint? The reason they care about the paint is because if the home is not being properly maintained, then that means that there's something else probably going on with the house. If you're not keeping what is obvious to people just driving by maintained, then what else is wrong with the house that you're not taking care of? So appraisers will go out and say, well, you need to cut back the vegetation from the house. With the insurance agents that I interviewed in preparation for this, I asked them about that. And I said, you know, what do you do about that? And what they said was, a lot of people think that putting those rose bushes in front of your house or some rhododendrons or some beautiful bushes right underneath that entryway window or the living room bay window. The curb appeal, beautiful. But guess what that is? It's like putting a neon sign out for furry little creatures you do not want in your house, as well as insects and pests. And guess what, guys? We have termites. We have termites in Washington. A lot of people don't know that. They typically are the wood kind. Well, they're all wood kind, right? But the ones that we typically get around here are the little flying guys. During the end of fall, you'll see them buzzing around the houses. And what they really are focusing on are typically fallen trees. They really love those fallen rotting trees. They find those delicious. Unfortunately, if those trees are close to a house where the siding has begun to rot, that is also welcoming in these termites and these pests. So close off any kind of entryways. Mice and small rodents, bats. I don't know if you've seen in Kingston, there was somebody that had posted on Facebook recently, a bat that was outside her daughter's bathroom, inside the house. We have bats, and those are also rodents. My cats have caught one or two themselves, and super exciting to see those in the house. And these all, guys, these all carry disease. They do. So they can come in the tiniest entries, the very, very smallest things, leaving your screen door open. Maybe there's even a very, very small area at the bottom of that door. They can squeeze in, and they do, because it's warmer inside the house. They'd rather be indoors, of course, than outdoors. So keep the vegetation away from the house. We had another insurance company that, because of the neighbors not caring for their house, the insurance premium was higher. So you would think that that shouldn't have any effect on your home. However, if your next door neighbor is not caring for their home, and let's say that they've got a lot of garbage out in the yard, they seem to be running more of like a garbage company than having a household, then they are inviting pests in, and those pests will come visit your home and start to destroy what you have as well. So even your neighbors are going to be affecting what those premiums are. The role of risk assessments and premium adjustments, that is going to be based again on what the property claims have been and what your personal claims have been. I have another client on the south end who had 3 claims in 5 years. And because of that, he was unable to get homeowners insurance. He could not find anybody to give him homeowners insurance. So he contacted me, asked me if I knew someone. I referred him to another agent who was able to finally find something to insure the house because there's a mortgage on it. So legally he needs one. And of course, for safety purposes, he needed to have that. But he is paying thousands of dollars just for homeowners insurance because of those 3 claims. What the insurance agents are telling me is this: if your claim is less than your deductible, so if you've got a $500 claim, or it's going to cost you $1,000 to do something small, do it. Don't make a claim. Be very careful when you call your insurance company. If you call and say, hey, a tree just fell on my roof and I'm wondering if should I make a claim or not. If you have called the main customer service number, they make a note of that call. And sometimes that will actually affect your premium, even if you don't end up filing the claim, because you've made a statement as to the condition of your home that could affect you not only in that home, but on any homes in the future. May I have the next slide, please? Does anybody have any questions about what I've learned about homeowners insurance? Knowing my disclaimer, I'm not an insurance agent. I can just tell you what I've run into and what the agents are telling me. Any questions? You guys are not participating. I should have made it so that you had to participate.
Julie, I was gonna say, I have no questions on it, but just for a personal homeowner, all these things are invaluable to know. So thank you.
Thank you, Michael. Someone participated. You'll get the grand prize. All right, next slide, please. Condominiums and HOAs. HOAs, those are like a 4-letter word to so many people for so many reasons. So let's talk about HOAs. HOA dues are calculated as part of the monthly payment for the homeowner. Whether they're refinancing or purchasing, that HOA, whatever that number is, gets calculated into that monthly payment. So even if you've got, say, a condo that's listed for $300,000, you think that is a darn good affordable home, right? Until we look at the dues and we see that the dues are $500 or $700. And that's because those numbers go into that overall monthly payment. I have had clients make a very good argument. I like the argument. Unfortunately, it doesn't work. And that argument is, hey, the dues include my water, my sewer, my garbage. So why are you including this in my monthly payment? If I had a regular house that wasn't part of an HOA, you wouldn't ask me what my water bill was or what I was paying for garbage. And that's true. It's a good argument. Unfortunately, because it's part of the HOA, we have to include that. So what's another problem with HOAs? Rules and regulations. Well, you go into an HOA, you don't like the rules and regulations. What I tell clients is get on the board, participate in the meetings, make sure they have meetings. Some HOAs don't even have meetings and they're supposed to. So the question is, how do they even come up with this? How do they come up with the HOA dues? They come up with it through some studies, and those studies are including maintenance and repair responsibilities. So there are 2 sets of people that are responsible for these repairs. You've got your HOA that's responsible for repairs, and then there's you as the homeowner. The reason that you would not be able to go to an HOA to fix something would be if it happens to your property in. So if your HOA dues do not include what we call walls in, so that is literally the walls in to the property, then you are responsible for any repairs. So another real life example, pipe bursts in a wall that is shared between 2 individuals. So you would think the HOA would be responsible for that. Well, because it burst in between these 2 walls, the HOA didn't cover it because they don't have walls in insurance. They did not cover the damage to the interior units. And so those homeowners on each side were responsible for those repairs. Next slide, please. So the lenders, those lenders. So the lenders look at condos to find out, are they approved? Condos are approved by FHA, VA, and there's a list with Fannie Mae. And here's a secret. Lenders also have a secret list of condos. When a condo is presented in a refinance or a purchase, we, at least at CMG, we have a specific department that is specifically focused on condos. It's all they do are condos. If I have a heads up ahead of time, I will present all of the information to them immediately if I do not see them on the approved list for FHA, VA, or Fannie Mae. All of these lists are public. Anybody can look it up. You can just Google FHA approved condos or VA approved condos or Fannie Mae approved. You can Google it. I always say, call your lender, your preferred lender. I will say shameless plug, Julie Jackson, CMG Home Loans, wink, wink. So the question is, let's say that they're not approved. Let's say that your condominium community is not approved through any of these entities. Are there alternative financing options? Can you do something to get a loan beyond just paying cash? The answer is yes. So I can speak in to lenders in general. Of course, CMG does as well, but most lenders have access to funding for these condos. The question is the risk, and I don't know this because this is on your side. I don't know what kind of risk you run when it comes to selling a property that has issues. So would you mind popping to the next slide, please? It's all about the financials. So of course you're thinking, of course, as a lender, you care about the financials, but it's the HOA financials that we want. And we want to see everything. We're going to expose everything about the HOA, including that reserve study. So according to the Washington State RCW 64.34.380, HOAs are required to do a full in-person inspection every 3 years. So a reserve study is basically a home inspection of the entire community. This home inspector puts together a very lengthy inspection. They take photos just like your home inspection looks like. Just like your home inspection, they will list the things that need to be done immediately, the things that need to be done in 2 years, 3 years, 5 years, whatever. And they will give you a 30-year estimate of what needs to be done. I've had HOAs say to me, this is a 30-year plan, so you shouldn't be worried about the fact that we had this done 3 years ago. That's not the way it works. The way it works is if it says something needs to be done, it needs to be done. So the reason we ask for that financial transparency is for our risk mitigation as well as that of the client. We want to ensure that that HOA is financially stable and can manage the maintenance costs that will be happening. So that reserve study is very, very important. We want to talk about the impact of inadequate reserves. So inadequate reserves means that the HOA does not have enough money set aside in savings to address any issues, whether it be a roof or decks. We've got one where the parking lot was a real mess and was causing liability because of potholes been taken care of. And so what happens if you don't have enough reserves? Okay, I'll give you the answer. If you don't have enough reserves, we're going to, I saw you, Erin, fine. Okay, Erin gets credit. She went like that. So what will happen is you'll get a special assessment. And that special assessment could be large, or it could be small, and maybe they'll do a hybrid. Maybe they'll just raise your HOA dues a little bit and give you a chunk of money that is due. And when that chunk of money is due, that money is needed. So, did you know that HOAs can borrow money too? It's true. So, when the HOA goes to borrow the money to get the work done, because usually this work, guys, is expensive. We're not talking about $10,000 or $20,000. We're talking in the millions. So typically they need to go get financing in place before they do the assessment. When they go for financing, they're going to a lender, and that lender is going to ask, how are you going to pay us back? What's your plan? If your dues are here and your reserves are here and you're about to borrow this much money, how are you guys going to make up for that? So the lender will require that there be some plan, whether it be an assessment, increased dues, what have you. They do ask for that as part of that plan. It is really important to review those HOA financials, whether you're listing the property or when you're representing a buyer. So I'm curious, how many of you actually go through the financials with your clients, whether it be the seller or the buyer? Yay! That is fantastic. That is fantastic. And I'm assuming that you also encourage them to be involved in their HOA community. Perfect. Perfect. So here are some real life examples. There are condos that are on the island that are very, very difficult to find financing for. And the first thing that I look for from my perspective is that reserve study. It's the first thing I look at. every reserve study comes with the beautiful page that shows the community photo. And then the second page in, you typically have, you know, when you order Domino's pizza, how you get the tracker and the tracker shows you when the pizza is being made and when it's being delivered. There's something kind of like that in a reserve study. And the reserve study goes from red to green. So red means bad, green means good. Or as I tell clients, red means run and green means go for it. So you typically see that in a situation is unhealthy and does not have enough reserves to handle what is coming. Now, as you go through each page of the study, you'll see exactly what needs to be done. It's very well laid out, as long as the HOA has done it. I'll give you another real life example. We had a client that was buying a property in Snohomish County. I looked at the reserve study. It was a mess. It was a mess. It was in the red, and I'm telling my first time home buyer, this is a little iffy because this is where the HOA is. So the president of the HOA gets involved, and what I find out is they were supposed to have implemented an assessment in prior years. There was someone on the board that said, we need a special assessment to address these issues. The board says, nope, we're going to table it for next year. They go an entire year without having another meeting. The next year rolls around, same board member says, guys, we need a special assessment, and now we need the HOA dues. You know what they did? The board fired him. Fired him because he was saying we need a special assessment. Needless to say, my client did not buy that property. May I have the next?
Julie, this is
Yeah.
such a great topic because on the south end at Maple Ridge, which is a 55 plus community, those homeowners were just hit with, I think, a $14,000 or $15,000 special assessment for roofs. So I think when I was reading the minutes of the meeting, it was something like 50% of the homeowners there said, yes, we could pay that. The other 50%, let's just assume that they're probably unlimited income. They don't have it. That condo is no longer FHA approved. So now we're trying to get the condo approved, for people who maybe want to try to take out a reverse mortgage. It is a nightmare for those homeowners, that other 50% who don't have 14 or 15, whatever the special assessment was. So now they're like, we don't know what to do.
Yeah. Yep. There are a couple like that here on the north end as well.
Yeah,
Same thing.
I heard one's getting ready to increase theirs to like 700 a month or something crazy. And I'm just like, yeah.
Yeah, it is crazy. And the sad thing is, as you know, we do have seniors that have retired in HOA in these condos thinking the HOA is going to take care of it because that's part of thing, only to be priced out of their own homes.
Yes, that's exactly what's happening. They're already paying $400 or $500 a month or whatever it is. So for them to come up with a 15,000, the one client I'm working with, she doesn't have it.
Yeah.
She's a single woman. Her spouse has passed away. She's on a very limited income. She's working part-time, but she would love to quit working at some point. And now she can't. So it's pretty sad.
It is sad. It is sad. So what do? We advise our buyers to look at those HOA financials. And please, please, please look at it before you take a listing on. I've got an agent in King County who pulled a listing on. She put the list on, and bless her heart, she did not look at any of the financials until she had a buyer. And the buyer, when I got the financials, I said, oh, this is it's a very big problem. And in this particular condominium community, nobody can sell unless it's cash because the condominium HOA is so. We encourage everybody to verify the track record. Read the meeting minutes. If the meetings are not being held, that's a problem. or if they're being held and you can see that comments have been made that something needs to be addressed, and then you read the next minutes and then nothing's done, then you're walking into a problem. So our buyers need to be prepared for that. We need to help them evaluate the stability of an HOA because, you know, nobody knows how to read these unless you're a lender or a real estate agent. We're the only ones that know how to read these. And so it's our job, it's our responsibility to educate our clients with this. And of course, work with your lender to ensure that all the documentation gets in ahead of time. So for us, we have this condo department. They love it when we get the information ahead of time. They would prefer us to get it ahead of time. So if I have anything questionable, I will send it directly to my condo department right away and say, can you look at this now and tell me what you think about it? And what do we need to do? Is there a way we can work through it? Because sometimes there is. Sometimes it's as easy as we had one where they were short reserves by not that much of an amount, but they had another issue. And the other issue was the percentage of homeowners that were delinquent in their HOA dues. And it was for the same reason that you just brought up. And that was because their HOA dues had gone up so high, they couldn't manage. And so they had homeowners that were like, well, if I can't pay the whole thing, I'm just not going to pay it at all. So the top condo problems: poor reserve studies and not preparing for them, the percentage of ownership that is behind in their dues or their assessments, that also affects financing, and pending litigation. I would say those are the top three for condos. Christy, have you seen anything different?
I would say those are, I'll be honest, we don't have a lot of I don't do a ton of condos, but I see Christina Boom on the call, and we had one where it was part of Useless Bay, and the HOA cert was not filled out correctly, and that caused some issues. It was regarding, is there a mandatory membership? And you can't really have a mandatory membership, but anyway, so there was some confusion on that. I just think it stemmed from the original HOA cert not being completed correctly. We got it resolved, right, Christina? I know, but it was, it was interesting. And then the person who originally filled it out wasn't even on the board anymore, so it was kind of like we were chasing our tail. Um, but it happens.
Which is another really good point. Thank you for saying that. The person that filled out the form, that's also important that you get the right person and they know what they're doing.
Yeah.
So important. Paige, can you pop over to the next slide, please? Thank you. So what do both of these boil down to? Be proactive, educate, educate, educate. Make sure that you all stay educated on homeowners insurance, on HOA rules, fees. Make sure you're staying on top of those financials and the lender requirements. So, we as lenders, we try not to be painful. We really do. We want it to go through just as bad as you do. So we will do whatever we can to educate your clients and help you through the transactions. And then my last slide is a thank you. Thank you for listening today. And does anybody have any questions or any feedback? Anything?
No, Julia, all the condo stuff was very, very helpful. Because I don't want buyers going into something that they're not aware of, or that might just either tank them or tank the deal. So it's great to kind of look for those bear traps before you go into it. So thank you very much.
You're welcome.
I'd like to express serious gratitude, Julie. This was really important information and presented super well. And
Thank you.
taking the time, and it's presented in such an organized way. So thanks.
Yeah, thank you, Julie. This was so great. And I think what a lot of agents don't realize is, like, the sooner, like from a lender's perspective, that we can get those documents, like on the
Yes.
listing side, if you can get those documents early, then we can discover if there's any issues well before contingency periods are up, or anything like that. It's just sometimes we don't get those until the 11th hour, and then we're, Julie. Oh, yeah.
I know. I know, but yeah, Yeah, the earlier the better.
So Julie and Christy, there's a difference between when you're trying to do the underwriting, whether you're the percentage of how many people are behind in dues versus special assessments. Do you happen to know that number?
Do we know what the number is?
Yeah, we've had that issue before where if they were behind on the special assessment, it didn't cause as much of a problem as if they were behind just in dues. The number of people that were behind, the percentage of how many homes are there.
No, my experience has been it's just as effective. What about you, Christy? What are you saying?
Are you asking, is it more detrimental if there's special assessments versus delinquencies?
Yes, and dues.
Yeah, I would think there would probably be more harm if there's more delinquencies. I mean, a special assessment, if they go to sell it, it's going to have to be cured at the time that they close.
That's
But I would also,
because
it's
they
going to be interesting because I'm in the process of getting this trying to get this complex approved. So it's going to be interesting to see what FHA's perspective or thoughts are on it, that there's so many special assessments that people can't pay. I mean, I can't imagine that they're going to look fondly on that, but it'll be interesting.
Yeah, I've got one where the special assessments, they're behind. We were at 26. The maximum is 25% that I've seen. It's 25%. And we were at 26% of delinquency of dues. And we were higher than that on the assessments. The assessments are just as important.
Yeah.
They are. So I'm not going to say that one is more important than the other, because typically a special assessment has been put into place because something was not prepared for ahead of time.
Yeah.
some kind of restrictions on a certain type of loan. I'll try to find that email that I got and I'll forward it to you guys.
Okay. Okay.
I think part of the situation is a lot of people have equity in their home, but until they sell it, they don't have the monthly payment that they can make those special assessments, but some of them are forced to sell so they can pay that large amount that is
Yeah. Yeah. Yeah, and any special assessments that are pending on a property during a sale must be paid at the time of closing. You cannot pass assessment on.
We've had instances where there were large special assessments that an owner, in order to sell, had to offer to pay like 3 years of as a credit.
Mhm. Yeah, I haven't seen that for a long time, but I have seen it before. So that's all I've got.
Oh, here's Ozell.
Oh, did he just join?
He's been on there, but it's been saying trying to connect to audio.
Oh, probably because he's connecting through his phone. We can't hear you, Ozell. Your audio is off. It's a lovely background, though.
I was listening to you on my phone, and I didn't want to, step into the middle of your event. So
I appreciate this. So this is my other half of Team Jackson, guys. Ozell Jackson. Did you have anything you would add, Ozell? Anything you want to say?
Nope. I've learned over the years that when